Hi guys, welcome back. It's LSP. It's currently the 24th of April 2021. So I'm going to try this again. And I'm going to be very careful not to delete this video once I've finished. And those of you who are in the chat will know exactly what I'm talking about. It was actually very frustrating. It was a very long video that I did yesterday. It's very precise. I went through a lot of different ideas. And then like an idiot, I just deleted it, which was shocking. That's anyway. So, as always, guys, these are just my thoughts and opinions. And what I want to do today, I want to discuss quite a few things, in the hopes that I kind of answer some questions, some of the recurring questions that I get through, DMs or emails. But more importantly, to just, I guess, answer the question of anticipation, versus confirmation. There's a lot of different ways of looking at the market, and we all have, a pair of eyes. We all have our own ideas, the way we think, the way we communicate with the market on a daily basis. And I think it's important that when we're going through this process, to have an understandable plan that works for us as individuals, because everybody has their own psychology that they bring to the table. Now, this word psychology is thrown around a lot in trading. You hear the term trading psychology, trading biases, and so on. But I try not to look at it in the sense of, trading psychology like a Freudian psychology. I try to look at it as a give and take psychology. Yeah. The markets are just a reflection of self. So if you understand yourself, you understand the markets. I remember hearing this quote somewhere many years ago. It's always stuck in my mind because that's exactly how the markets are. If you have a string of traders, doesn't matter, 10, 15, 20, 50 traders, whatever, and they're all looking at the same data, in this case, for example, Bitcoin, they are all looking at something completely different, and yet some may lose money, some may make money, some may break even. So how is that possible? Some might say, well, they're using specific indicators and they're using them incorrectly, or some people might say, well, they're reading the chart wrong. But I don't think that's the case at all, because I know traders who are fundamental traders. I know traders who are technical traders. I know traders who just trade futures. I know traders who just trade Forex. I know traders who just, trade the news. I know a specific trader who used to work for Goldman Sachs for 23 years or 24 years, whatever it was. And he just trades earning seasons 4 times a year, and so on and so on and so on. I know traders who use supply and demand. I know traders who use Elliott wave theory. I know traders who use, negative and positive divergence using MACD and stochastics. I'm very lucky to know so many different traders that use so many different methodologies, systems, ideas, and they will make money. So it's not a question of which one is better, which one works, which one doesn't. The question is why, why are all these traders that I personally know and can point them to you and say, this guy or this woman makes money using this, why are they able to do this if it's the system or the methodology that is responsible for being, for you being able to pick the right turning point or to pick a decent trade and so on and so on? It's got nothing to do with methodology. It's the trader, the investor. You can get two people that are looking at the same house, for example, and one person will look at that house and say, oh, this is going to be a nice home. The other person might look at that house and say, you know what, I could knock that all down, renovate it, build 4 flats, and rent them all out. Do you see what I mean? But it's the same house. Everything is about perspective. Everything is about the way you look at things and the way you internalize them, and then how you act on that information. So with all of that said, we're going to go through some analysis on Bitcoin, and then I'm going to explain some other things which I hope and believe are going to be some key eye-opening things for you to kind of take into consideration. So with Bitcoin, I'll start obviously with this drop, which was quite a nasty drop, quite a dirty drop. I don't really use the word dirty that much, but it's a horrible drop, right? And when it happened, my phone blew up. You can imagine I, quite popular in trading and investing, so to speak, especially with Bitcoin. So my phone started going crazy. I didn't answer any of the calls. I just sent out a blanket response in one of the group chats that I'm in, and I said, go and take a look at the monthly chart and leave me alone. Yeah, those were my exact words. Go and take a look at the monthly chart and leave me alone. Yeah, because I couldn't be bothered to pick up the phone and have to deal with, oh, what am I going to do, and oh, this and that and the other. You know, it's like I tell these guys, you know, you need to have a plan. You need to be able to stick to that, because if you don't, you're going to end up getting dragged all over the place by your emotions, right? Stop looking at the P&L. Stop looking at these, 5-minute time frames. Stop looking at these 15-minute time frames. Stay on the higher time frames. So what we're going to do is we're going to go ahead, and look at the monthly chart. And we're just going to put things into perspective for a second. When you look at Bitcoin like this, we know obviously the same common thing that I've said this many times. Other people have said this many times, but maybe not in this context, yeah? Bitcoin was around about $10,000 here, and it ended up close to $65,000 up here. Yeah, that's a pretty insane move. Yeah, and when I will explain this perspective using a lower time frame to give you guys a really good understanding of what I'm trying to say here. Yeah, because people, I honestly think, and I genuinely believe what I'm about to say, people don't understand the relationship between the monthly chart, for example, and the hourly chart. Yeah, there is a huge time difference. Yeah, when you're looking at the hourly chart, for example, an hourly chart, each candle represents 1 hour. Yes, we know this, but each swing or each rally or each reversal or each consolidation may last 3, 4 days, 5 days. Yeah, now imagine transposing that to the monthly chart and seeing exactly the same thing in terms of pattern, the way the chart's moving. That swing point, or that rally or that consolidation on a monthly chart will take years to unfold. Years, man, years and years and years to unfold. Yeah, even though we're looking at the same, idea, so to speak. So, if we saw this monthly price delivery or price action, and this was let's say we're looking at an hourly chart, for example, and let's say we're looking at a 15-minute chart. We'll do 15-minute chart. Would you, a normal trader who's been trading for a good few years and understands the markets well, and and knows how to at least break even, you see this explosive move to the upside, would you be going long up here if this was a 15-minute chart, or would you just let it pull back a little bit? Yeah, maybe settle somewhere around here. People who are fans of Fibonacci, for example, 50%, 50% retracement, is always a big, a big favorite for, for those who use Fibonacci. So you would, let it pull back, let it settle for a little bit, and then maybe try and pick it up around about sort of 40,000, between 35 and 40,000, right? Yeah, you wouldn't be buying it up here. You can see the parabolic move; it's insane. So there's absolutely no reason why anybody would be going long up here on a 15-minute chart. So why would we be doing it on a daily or a monthly chart or a weekly chart? And then on top of that, when we see the nasty drop on the daily, why would we not take into consideration the monthly chart and where it is? And that it needs to pull back a little bit, it needs to relax, it needs to just breathe, it needs to deal off all of this movement, yeah? And this accumulation from 10,000 all the way to 60,000. This is not going to keep going in a vertical line. I've said this so many times, yeah? The markets simply don't work that way. If they did, we could all just pile our money in and go and do something else, come back in 5 years' time and collect our check, yeah? That's just not going to happen that way, obviously. Sorry, I'm just taking a drink. So, going back to the daily chart, now that we have our perspective, this doesn't seem so bad now. It still seems bad if you did buy up here because you're only looking at, say, the 4-hour or the hourly or the 15-minute chart, and whatever representation that was for you at the moment, you went and got some Bitcoin up here at, say, 62 or 63,000, and then you proceeded to just get decimated, and you're sitting on a position now that's losing money. So then we start to look at something else. We start to look at, what are you doing with your Bitcoin? Some people believe it's a store of value. Okay, so if you're buying Bitcoin as a store of value, you simply don't care what is going on with Bitcoin. You'd be using this opportunity to buy more, for example. Yeah. And I'm just using an ideal scenario where people have plenty of fiat currency to just plow into Bitcoin. Yeah. So you'd be using this opportunity to just buy more Bitcoin. But for those people who are actually trading Bitcoin, for example, yeah, then this is not a good scenario if you bought here. yeah, and you're pretty much sitting on a pretty nasty loss, yeah, regardless of whatever position you're holding. So then you start to do something a little bit crazy. Yeah, you start to look around you. You start to, jump into chats. You start asking questions like, what do you think about Bitcoin? Yeah, where do you think Bitcoin's going next? And so on and so on. And to experienced investors or experienced traders, these questions, they stand out like a sore thumb because we know why people are asking these questions. They're sitting on a loss and it's painful. Yeah, and that's understandable. I certainly experienced that. Oh man, over 25 years, trust me, I've experienced that many times. But where do you draw the line and start to think, okay, look, am I responsible here, or am I just going to keep shifting the blame onto other people? And there has to be a responsibility. I mentioned this in the Smart Talk. There has to be a responsibility. The onus has to stop with you, the trader, the investor, the person who's looking for that opportunity. And when you take that responsibility and say, yeah, do you know what? I am absolutely responsible for everything that happens in my trading. So because I'm responsible and I know this now and I accept it, that opens everything up now. And all of everything changes for you. You have so many more options. Because you can say, am I ever going to do this again? No. Am I going to wait for an opportunity to buy, say, down here, or am I going to wait for something else to happen? Or I'm going to start looking for confirmation instead of trying to anticipate, and so on. So it opens everything up. Whereas if you're so focused on shifting that responsibility onto somebody else, then you're always bouncing around, just looking for anybody to validate your position. Yeah. I just want this to go back to break even. I need to find somebody who's going to tell me it's going to go back up. Yeah. So there's just the first part. Now I'm going to go through the analysis of Bitcoin, and hopefully it will help, yeah, to just kind of give us an idea of where Bitcoin could be going, what we can expect going forward. Now, before I go into this, I want to be absolutely clear. I'm not giving you trade advice. I'm certainly not giving you investment advice, and I suggest that you all pay attention and just, take the information at face value. And then once you finish that, fuse it together with whatever you're doing, and just see if you can find a happy medium. Just give me 1 second, guys. I just need to pause the, I need to mute the mic a second. I should be okay. Yeah, no, that's fine. Sorry, guys. So, if you've been watching the videos up to this point, you'll know that we have this primary liquidity pool here. Price moved away nicely, broke the high, and then we have a nice pullback here. Now, what's interesting, and I'm going to go very specific and be very clear about what I'm going through here. Sorry, guys, just give me 1 second. Yeah, so I thought somebody was at the door. They're not. So price comes down and it just taps the top side of this liquidity pool, okay, and we get a really nice move away from this. Now, people ask me, how are you able to do some of the things that you're able to do? And just on this just in this small section here, there is so much going on that you have to be aware of, right? And not only do you have to be aware of it, you have to understand it. And when you understand it, it opens up more things, so you can go deeper into what's going on. You can kind of figure things out. And I'll give you an example. As price pulled back and it touched the top of this liquidity pool, this is the full liquidity pool that I've made a note of right here. So as you can see, right, this full liquidity pool, price just tapped the top of it here and then it moved away, right? So there's two things there. One, that it touched the top of the liquidity pool, and two, it didn't just move away, it really moved away nicely, yeah? It didn't kind of stay around here a little bit and then kind of bleed into it a little bit. It tapped right at the top, very important, and then it moved away, and it moved away nicely. And then it pulled back a little bit, and then it moved all the way up here. So this small what seems like a small accumulation right at the top of this liquidity pool here was responsible for clearing this high with eventually here. So this liquidity pool, not this one, this liquidity pool right here, the light blue one, okay, is in control and responsible for price moving all the way to here, and it accumulates along the way, just there, okay, and then it goes again. All right. Now, when you look at it this way, you start to notice a few things. Price is moving from this point to this point. It accumulated along the way. It takes out the high on that last move up, and then that's objective fulfillment from here to here. When you know you have objective fulfillment, and I know I'm going into concepts that you may not understand, but just go with me. When you know you have objective fulfillment up here and then price starts to pull back, this liquidity pool, which you'll notice I didn't even make a note of, and this liquidity pool here, okay, have no bearing, right, on where price could potentially be going, because we're probably coming to the other side of this liquidity pool now to rebalance and dip into the primary liquidity pool down here. Now I'm going to pause there for a second. I'm going to explain something. Somebody said, how can I use this information? And I get this question a lot. How can I use this information, right, to time the market and know what price is going to do so I can just get out at the right time? So I can get out up here and then I can rebuy it back down here. I'm not a trading god, yeah. I'm not, Mystic Meg, for those of you who've been around long enough, and I don't have a crystal ball, right? Nobody knows that. But we can use the information and the way that we read price to give us a very good indication of where price is likely to go. And I have levels that I'm watching to say, okay, if that level gets traded to, then I know there's been an order flow shift. And if I see it, now I know what I need to do. I'm waiting for confirmation. I will never anticipate. I used to anticipate trades all the time. I don't do it anymore. And I haven't done it for years. I always wait for confirmation, because I don't care if I buy Bitcoin here, okay, and it goes to 60,000 and I make that profit, or whether I buy it at 60,000 and it goes to 70,000 and I make that profit. And I'm not talking about investing, I'm just talking about trading. Holding Bitcoin for store of value is something completely different, and that's a separate issue, yeah? I'm talking about using this information, not specifically on Bitcoin, but just in general, to trade and to earn an income and to increase and add to your wealth, right? Does it really matter where you're buying it? Of course not. What really matters, price is irrelevant. What matters is understanding the key moments where you're like, yes, price has just turned, price has just shifted, now I'm paying attention. Now you'll notice I didn't say price has just shifted, now I'm jumping in. Price has just shifted, so now I'm paying attention and I'm waiting now for confirmation on a lower time frame that the higher time frame idea that I have is in play. So if I'm expecting, say on the daily chart, that price is going to come down to, say, 42 to 40,000, between 40 and 42,000. Now I'm going to be looking on the hourly and the 4 hour for confirmation that the idea is playing out. Yeah. So there's a lot going on this chart. And price came down and it went straight through this liquidity pool to the other side of this liquidity pool to rebalance, yeah, and dip into the primary liquidity pool, yeah. I was aware of this. I knew this was going to happen, but obviously I didn't know how fast this was going to happen. When it became clear to me was up here as it started to accelerate to the downside. And as it started to accelerate and it went straight through this, I'm like, yeah, we're going straight down here, yeah. And any push higher now is basically just a rebalancing top side to basically come down into the primary liquidity pool and accumulate more. And obviously I believe very firmly that the market's massively manipulated, and this is 100% in my opinion, a very calculated and deliberate move, yeah. So that's just the way that I think, and I can verify it, to be honest, using COT data. But anyway, not specifically on Bitcoin, but just when you're looking at COT data for commodities and things like that, you can see it's such an easy thing to see in terms of manipulation. So where do we go from here? Yeah, with such an aggressive move to the downside, now we have to start looking at the imbalance of the buy and the sell. What's been dealt off? What's being held now? Imagine yourself as a huge entity and you're holding positions on both sides. You hold buys and you hold sells, and you have more sells than you do buys. That's what we're trying to figure out. Yeah, we're trying to figure out the imbalance. Where is that imbalance? Because if I can find that imbalance, I know where price has to go. Not should go, I know where price absolutely has to go to rebalance that scale. Yeah. And again, it doesn't matter if you subscribe to this idea, whether you understand it. This is just the way it is. Yeah, I could show you things, on a chart to pinpoint accuracy, and you'd be scratching your head saying, "What did you just do?" Yeah, I've done this with people so many times. So it's not a question of, I know something that other people don't. Don't ever think that. That's not what I'm saying. But I'm saying that when you look at the markets in a certain way and you understand what's going on, it allows you to find these imbalances, right, that need to be plugged. And then you don't really care about price. You don't really care where it is. You don't care about anything. The only interest that you have, say if you just go long, for example, and you're not interested in trading and going short, you just want to accumulate Bitcoin. The only thing you're interested in is waiting for price to come to an area where you believe and have very high level of confidence that it's going to stop, turn, and start to go back up again. That's your accumulation point. People who are traders and looking to buy and sell, to go long and to go short, will be looking for opportunities like this one on the way down, or like this one as it starts to break the high, this one as it starts to accumulate just here and starts to go up, or maybe where would another one be? To the short here is a great short as well. To be honest, that was a classic short to take this small move to the downside. This one's a little bit trickier. So depending on what you're trying to accomplish here will depend on what you use this information for. But like I said, as the analogy of the house, it's still the same information. So where do we go from here? Because we've effectively taken this liquidity, it's finished. This liquidity is obviously gone. That's gone. We'll start to clear up this chart. We'll start to get a bit of a better feel for where price could potentially be going. All the liquidity this side of price is finished. Now we have it would be here. So we've got a little bit of liquidity up here, and you can see that price as it went through, and then it started to dip a little bit. It did come back into it, and I'll put the cursor just there. We're talking about this wick here. Went back into this liquidity, which is basically, and I don't want to put too many boxes on the charts, but it's basically this one here. So you've got liquidity, the liquidity pool here, and then you've got a smaller liquidity pool here, and then price dipped into that, and then it started to push back to the downside. I'm going to get rid of this one because it's too much. Just need this one. And I'm going to change the color as well because that's a horrible color. We'll just make it yellow. So it dipped back into it, and then it started to push down to the downside. That move right there, just as it tapped the top end of this primary liquidity pool as it did here, and took out this low, and then started to slow down here, was an absolute guarantee that price was going to go deeper into this. Now here's the interesting thing. We've gone straight through this, and we've gone all the way down into around about 70 to 80% of this liquidity pool. So if price starts to grind to the downside, this is getting taken out, and this liquidity pool is going to be done. And then we have to go to this area over here, which will be the next area, all right, down here. And what I'm going to do, I'm just going to reduce this just to show the remaining liquidity there. So we've got remaining liquidity here, and then obviously we've got a full liquidity pool down here, and then we've got a massive imbalance over here. So we start to gain some more legs to the downside. Expect 40 to 42,000 on Bitcoin in the coming weeks and months. The telltale sign in terms of dropping down to the lower time frames and getting an idea of whether the confirmation is there for that, what I would like to see, and you can see here, we left a huge imbalance here as price dropped very fast. This was so fast to reach for liquidity, and then look at the pullback, almost nothing. That really small rally didn't even come close to even trying to rebalance it. We had this crappy consolidation, back and forth, and then another nasty drop. So if we do, and remember that nasty drop cleared out most of the liquidity in the primary liquidity pool in the daily chart. So if we start to run back up into this, we're likely to just hit this small spot just here around about sort of 51 to 52,000, maybe a little bit higher, and then reverse and start to grind a little bit lower. But this is another brick wall that it needs to go through, and it's unlikely now at this point, with the levels that it's at and the flows the way they are, that price is going to rip to the upside, rebalance, rip straight through this, take all that liquidity, rebalance up here, and then start grinding towards those previous highs. Yeah, I believe that we're headed for lower prices. I'm just going to line this up. I believe we're headed for lower prices now on Bitcoin. So I'm expecting between 40 and 42,000 to be traded to this sort of area down here. Obviously, we'll monitor this, on a daily basis and see where we go. And that's effectively the analysis for Bitcoin. I'm not going to go into too much detail. There is obviously a lot more going on this chart, the 4 hour and the hourly, and we can kind of break it down and go really deep into all of this, but the video is getting too long, and I want to kind of do this in stages. And there's a lot of stuff that I'll hold back, guys, for two reasons. Number one, I've worked very hard to get to this point, and number two, you wouldn't understand it without all the foundational stuff anyway. Yeah, so you just have to be patient with me as I slowly drip the information to you in a way that I firmly believe will slowly fuse itself together, and the understanding will come. And you guys know me by now anyway. I'm always there to help, and I do my best to make sure that anything that I discuss or talk about, I try to expand on that through private messaging. You guys know. There's so many of you that DM me, and I always make the time, to DM and to answer to those questions and get back to you. So and it's my pleasure. I absolutely love all of this stuff. I love doing it. So don't ever feel, I don't want to DM him. Just DM me. If you've got something to say or got a question, anything, just DM me. No problem. We'll put it in the Wealth and Trading channel, more importantly, so everybody can see it and we can engage that way and everybody can learn. All right. So I'll just quickly finish with the Smart Talk that we had recently. Was great. I will be expanding on those ideas, that I went through in the Smart Talk. Obviously, a big thank you to Ben, for setting that up as always. And the next Smart Talk will be next Thursday, or this coming Thursday. So details of that will be posted in the poll and in the chats as normal. If you can make it, make sure you do. There's going to be some very interesting topics that we're going to be discussing this coming week. I'll leave it at that, guys. I hope everybody's having an awesome weekend, and I will catch up with you guys in the chat and in the next video. Take care.